This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Back to your TF Metals Report podcast highlights for the week of Monday, December the 5th, 2022, a week that we knew would be pretty quiet. No Fed speakers this week because of the pending FOMC meeting for next week. You always get a quiet period the week before, so we don't have to worry about that. And there wasn't a whole lot of economic data that was pending this week either. So we knew it was going to be a pretty quiet week. However, the metals really got smashed backward on Monday. That was a big topic of discussion that day. But also that day, we took a close look at the chart of the S&P 500. On 3 occasions this year, the S&P has rallied to a perfect point on a downtrend line. And on the 2 previous occasions, it then fell 20% over the next few weeks. If that were to happen again, we'd be targeting something like 3,200 on the S&P by sometime in January. Now look, you may think that's not directly related to the precious metals, and it's not. But if that were to happen, it would certainly impact the precious metals. It would impact what people are thinking about where the Fed is going next year. And so that chart of the S&P 500 was something we looked very closely at on Monday, December the 5th. Finally, longer term on stonks, you've got to see this because we've been tracking this trend line. The last time it came up and stopped precisely at the trend line and the 200-day moving average was in the middle of August. And over the course of the next 8 weeks or so, it fell all the way down from 4,300 to 3,500. That's almost 20%. That was ugly. Now has made almost a perfect trend line up. But man, those days now are numbered. Look at how little room is left in this pennant. Oh, and look. Thursday's highs, where it actually got above the 200-day moving average briefly, were almost right at the trend line. Absolutely incredible. So could you make the case the stock market's about to fall? Could it fall 20% again? Let's back up. End of March, what's that, 4,600? To June lows, 3,700, 900 points. That's 20%. From middle of August, the third point on this line, 4,300 down to 3,500 in October. That's about 20%. If we fall 20% again from here, this fourth point on the line, what would it be? 3,800 points, 3,300? It's possible. Certainly possible. Tuesday, December 6th brought another rally in the dollar. It was a dollar rally on Monday that inflicted such losses on the precious metals. The dollar continued to bounce on Tuesday, and that dragged the metals down a little further. Now, the dollar obviously going to be very important always for the precious metals as the computers trade and buy and sell gold and silver futures based on which way the dollar is moving intraday. So you got to be aware of the trend. You got to be aware of the chart. And that chart was something we looked at on Tuesday, December the 6th. So what are we going to watch for here? Is this a false breakdown? Plunging below the 200-day moving average last week and now trying to move back above it. In fact, today's high right at the 200-day moving average. So what happens next? Does it jump up, get back above 106, make a run toward this little downtrend arrow that's about 106.50? If it gets above there, is it going back to 108? And if it does go to 108, that's not going to be good for us. I know that in the short term. Maybe it rolls over. I don't know. We'll watch it really, really closely. Not only this week, but next. Another factor that those machines track every day in making the decision to either buy or sell gold and silver futures is the bond market. Are rates moving higher or are rates moving lower? Well, as you know, interest rates have been moving higher most of the year, with the yield on the 10-year note getting all the way to 4.4% about 6, maybe 8 weeks ago. They've been moving down ever since and getting all the way back down to 3.4% at one point this week. This is a big move in interest rates, and lower interest rates are always good for gold. And so that was all part of what we discussed Wednesday, December 7th. Here's that 10-year note chart I was telling you about. Again, double topping, north of 4.25 up near 440. Now falling dramatically since the early part of November. And this is all part, why is gold rallied? You had the short squeeze, all that other stuff. But this is a huge move from north of 4.25 down to 3.40. Huge drop in the 10-year note yield. Again, nominal rates coming down, inflation expectations remaining sticky going up. You've got moving backward on real interest rates, all of that helping gold. And again, you can see a clear trend here in the yield on the 10-year note. Our Thursday conversation this week was with our old friend, the renowned geologist, Dr. Quentin Henney. Dr. Henney was here for our Thursday conversation, which is always a free post at TF Metals Report. If you want to listen to the whole thing, just go to tfmetalsreport.com, look for the link on the homepage, click it, and you'll learn a lot over those 30 minutes. I can promise you that. And as a benefit to TF Metals Report subscribers, Dr. Henney commented on a few specific mining companies and their prospects. So we had people from the site solicit a few names, and Dr. Henney told us what he knew. One of those companies is Eloro Resources. It's one that I own. It's one a lot of people at TF Metals Report own, and it's one that Dr. Henney is particularly excited about. Again, you can listen to the whole podcast by going to TF Metals Report, but here's a snippet of what he had to say about Eloro Resources.
Well, I'll tell you, Eloro is onto a world-class system. There's no question. I'm talking about it on Friday. We do the videos, and whenever they have a drill announcement, I have an updated 3D model. Did this last week, showed the world. If you can't understand that Eloro is onto basically a world-class silver, zinc, lead, tin system, you shouldn't be investing in mining. It is an extraordinary story. I think that once they come out with their initial mineral resource estimate in March is what I'm being told, it should be north of 500 million tons. I think it will have, about maybe 3-4 ounce silver equivalent grades. So what does it mean? Probably about 25 to 35 grams silver, maybe 1.5 to 2% combined zinc lead, and maybe 0.12 to 0.18% tin. Okay, tin's a very important component, but it is an extraordinary ore body that will have a huge amount of value. It's the kind of deposit that can make a lot of money. There's a mine nearby, San Cristobal, which has been operating for about 18 years, has absolutely made tons and tons of money. So this is going to be the next.
On Friday, December the 9th, it was great to watch COMEX Silver. It now has fully recovered all the losses from earlier in the week and finished another week with a green weekly candle. So today, let's revisit that chart we looked at last week. If you follow these weekly podcast summaries, you'll remember this chart. We picked up on this almost perfect and symmetrical cup and handle formation on the chart of COMEX Digital Silver. And when it broke out last week, those types of formations usually foreshadow even more gains to come. And that's what we got on Friday, with COMEX Silver getting very close to $24 per ounce. And it is now up almost 2% on the year, which may not sound like much, but considering it was at $17.50 just 8 weeks ago, and considering everything else is down, especially the stock market, having silver turn positive on the year with a couple of weeks to go is in fact a very interesting development. This pattern on the chart looks like it's projecting even higher prices in the weeks to come, so keep an eye on it. We'll keep an eye on it here at TF Metals Report too. It's going to be a very busy week next week with the CPI inflation data coming on Tuesday, Powell and his FOMC meeting and press conference on Wednesday, and then some more data later in the week. It's going to be very busy. So please be sure to check back next Friday for your next edition of the TF Metals Report podcast highlights. Thanks for listening, everyone.